Good afternoon, everyone. Welcome back to Commodities Update video. And what a day today in the market. Everything's green, and including natural gas. Natural gas is looking a lot better. Today we'll be doing technical analysis on natural gas, UNG, oil, US dollar, gold, and silver. So we'll be looking at their support resistance levels as well as the most likely scenario price will be heading into later this week. And if you guys learn anything, feel free to like, share, and subscribe. They're always appreciated. Let's get started. So over the weekend, I was talking about this inverse head and shoulders potentially forming, and it looks like the bulls decided to show up. The last 2 days. When I was talking about it was over the weekend, so we were just down here at the Friday candle, and I said that we need to bare minimum get above EMA 12, which is a teal looking line. We did that. Close above this 1.77, so we did that. So bulls did the two bare minimum thing they needed to do is to get over this level. As you can see, in the past week, we never closed above it. We always closed below those levels. We closed above it, and now today, back tested it, came back up, and now we're close to high of this day. So that's a very good sign for the bulls. So now that the probability of that inverse head and shoulders is now increasing due to this momentum we're coming up here. And so let's see, when we come back up to closer to around this level, around 1.868, coming up to that neckline range, we'll see if the bulls, pull back a little bit. We just want to see a slight pullback. We don't want to see something just roll over again and make a new low. So the inverse head and shoulders is the psychology of it is pretty much a downtrend into a uptrend where we form that inverse head and shoulders and higher. So ideally, we form something like that. Maybe potentially hit this prior support. Over here, bounce, 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 and then it might act as resistance where that right shoulder might be, and then we get a slight pullback, and then that'll be the best case scenario. We get a slight pullback, and then we'll come up to test this 1.933 resistance, which is the resistance boss of the last boss of natural gas, because we have not gotten over it at least 1, 2, 3, 4, 5, 6, 7, 8 times here. Another time here. Well, so which is also pretty close to the neckline of that inverse head and shoulder range. And if we can get above that, then that's perfect. We might get a lot more upside to that, potentially up to $2 and then 2.09 if we can get over this 1.933. So we might get something like this where we come up, the inverse head and shoulders, hit that area again, pulls back again. If it's a slight pullback, then we have another chance of breaking it, but we'll see. One step at a time. That's going to take another, probably into next week or longer. We'll see how these things shape up. Obviously, we don't need to form that inverse head and shoulders. We can up straight to it, hit that, then pull back for that right shoulder, or just, full ways to play it. So we'll see how it goes. But as of now, good sign that we have gone above this falling wedge resistance. This is support, and this is the resistance. Rejection, broke out, close above it. So tomorrow I want to see more follow through from the bulls. Last thing I want to see is we broke out of it and then we come straight below it and close below it. And that'll be a bull break lacking zero follow through. See, I want another green day tomorrow for natural gas, at least, and for that to be a clear breakout, because we pretty much just came out of it, break out of it, and the last thing we want is come up and we have something like closing down here again. So now, good sign, and let's see if we can break out another candle tomorrow. Maybe come up here, at least somewhere around there. That'll be 6%. All right. You guys want to learn more about trading, how to be more consistent, profitable trader, and how to, if you have any mental plans or issues where you overtrade or anything kind of like that, feel free to go to the Patreon link and check the coaching link out, as well as if you guys want more information, book that 15-minute call with me and we can talk more about anything you want to correct. And feel free to support the channel as well in the same Patreon link. All right, so UNG, similar idea. You can see this 8-hour inverse head and shoulders actually forming. We can come up to this 15.7 in the range. That'll be the resistance over here, and resistance, which is the same level as that 1.933 for NatGas. So we'll see if that can potentially at least not just roll over when we test it like this. Give us something where we get a slight pullback and we form a little bit of a base and we retest. It might be a good chance to add it around here when we start curving on the up on the right side of the V. And we'll see. You'll have a clear level to play off of. If we hit that and it start rejecting, and then we have a sideways curve and come up like this, then you add on the right side of the curve, and you have a clear level of stop loss to set right below it. And if you're wrong, no big deal. You stop out for like 0.5% or something. If you're right, then we come up here, retest it, and get a nice breakout. We won't break out the first time. We could come with something like this and then hit it again and then go up like that. But that's just the idea of it. That may potentially happen. And you guys know why I talk about the 8-hour EMA 12? Finally broke above it as well. You can see Monday broke above it, back tested it as well. Yeah, we back tested right there, bounced off of it. Air resistance, acting as resistance, never closed above it. Now we closed above it and we back tested and hit it, head higher. All good signs for the bulls. Tomorrow, let's get to see a little bit more follow through from NatGas and see if can continue for the bulls. All right, let's take a look at oil. Let's see. So oil coming back to the lower range of the sideways drop zone right here. So it's going to be a little bit of resistance if we can break above $80. If we break out $80, I'm looking at this 80.6 low of this range. It's going to act as resistance. And if we can't get over 80, we're probably going to come down to test the low of this range. So break above 80, we'll come down to 80.5. If we can't break above 80, we start coming back down. I'm looking back closer to 77.8, this zone right here. And this might actually form a little bit of a equilibrium. So we move up, we move down. If this breaks above 80, we might come up a little higher and then start tightening up, which could be a potential equilibrium here. But as of now, we need a little bit more information to see if we can at least head higher and then start curving over at that potential tightening range forming here, like a sideways consolidation tightening range. And each move will be within the prior move until it breaks out of that move. Right, let's take a look at US dollar. So US dollar pulled back today. This is looking, it's a small daily downtrend. So you can see potential bull flag, and then we form a mini daily downtrend. So we broke the prior low, so that's a daily downtrend confirmed. My guess is because of today's data this morning. It's showing inflation starting to slow down a little bit more after 3 months of being hot. And that just made the dollar drop a little bit because my guess is that the probability of the rate cut increased a tiny bit, so made the dollar drop a bit. Yeah, these data can be volatile, so we'll take it one day at a time. And today, we get a bear break on slight weekly or daily downtrend. So that might form that weekly tightening range for me now. Increases the probability of it because we have formed that little daily downtrend. So if you go to the weekly chart, you can see we move up. Next move down is within the prior move. Next move up is within the prior move. Now, since that daily downtrend confirmed, so this probability of this marking the temporary top increases, and now we make it that tightening range, forming like that. But each of these candles is 1 week, so it takes a really long time for it to form. So if this week we close below the prior week, then that increases the probability of what I talked about increases. So right now we are below the prior week, but let's see if we can close this week below it for the dollar to pull back. If the dollar starts to pull back, that's good for the overall stock market. And yeah, America would like it. It's not like tick for tick, but just get a bigger trend down, then market would enjoy that weaker dollar. So let's see here. Gold. No red flag over the weekend, and we have a Monday slight red flag where we haven't broken prior. And I would say this is a prior pivot here, and then this was the red flag where you flushed through that 12 EMA, which is this teal looking line. You can see it was acting as support over here, support. Broke Monday, closed below it, flushed through it, came to the near-term support. You can see this is the only little support on the way up, where we consolidate slightly here for a few days, and then we head higher of that level. And now let's see if the bears are going to be serious about this drop, because bears now have made enough room on the next bounce where they have a lot of room now to potentially form a daily downtrend. The bears can't do that. We just reshape up, and this was just no big deal. This was just a break to see the liquidity, and then we just came back up. But if the bears are serious about this, we'll have a weak bounce under 50% retracement, and then we will roll over, form a daily downtrend. So let's see, 50% mark is 2352. So if we bounce and we don't get over 2353, it increases the probability of bears confirming a daily downtrend. The probability of it confirming a downtrend even more if we don't get over 0.382, which is this 2338 zone. That'll be a bear flag. But as of now, let's see tomorrow, see if the bears are going to show up or not. Bulls did a nice bounce here, so yeah, it's a pretty big bounce. So let's see if we come up here or not for tomorrow. All right, silver, similar idea, came back down, tested the prior support, this 26 line, which was support here as well. Let's see, bounce, 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 came down to it, bounce again. And same idea with gold, big enough drop. You can almost say this is one entire drop, because these candles are very tight. Could be just one move, but we do have a little bit of pivot here, which is a daily downtrend. But that's too tight for me. So what I want to see is after this drop, are they very serious about bringing it down as well? We come up, test these levels, these lows, and then we reject it and head lower, then that's a daily downtrend confirm. And the momentum of this move is likely over. And we may form something like another tightening range, which we've been tightening up forever. You can see every time we make these big moves, silver likes to tighten up its range, which it did. Took like 2 years to tighten up and then break out of that wedge. All right, feel free to ask any questions in the comments below. And if you guys have any questions, feel free to book that 15-minute call as well, and we can talk about coaching. And feel free to like, share, and subscribe if you guys made this far. And what else is there? Yeah, have a great rest of you guys' week. I'll see you guys in Thursday or Saturday for more updates.